Everyone, welcome back to my channel once again, and today we are going to talk about one of the best IPOs according to me. So the IPO which we are going to talk about is of course Airbnb, like you might have read in the title as well. And I know many people are not a big fan of IPOs, especially when you hear about Lyft or Uber. I know, and many more. But according to me, Airbnb is definitely not one of them. And that's why I'm bringing this video to you guys. So in this video, we'll be covering few bearish points regarding Airbnb, then some bullish points as well, and then last but not the least, the valuation at which we might be interested as retail investors. So please watch the whole video to get the complete understanding of this stock. But with that being said, I'm not a financial advisor and I can be more than 100% wrong. So this is just my analysis and my point of view regarding Airbnb. And I hope that you would really like this video, and if you do, then please hit that like button. And if you guys are new here and haven't subscribed to the channel yet, then please don't hesitate to hit that subscribe button as well, because that really motivates me to bring up such content. And I know there was a long gap of me not putting any videos out there for you guys, but I had many other priorities. So anyways, without further ado, let's just jump right into the video. So guys, since we're talking about Airbnb today, let's just have a quick look at its history. So Airbnb was founded by Brian Chesky, who is the current CEO, Joe Gebbia, and Nathan more than a decade ago in San Francisco as a property sharing service that allows travelers to book stays in homes, condos, and apartments. And actually, that's one of the positive points regarding Airbnb, that you can literally book condos and big lavish apartments. Anyways, we will discuss the bullish points in details later on in this video as well. So Airbnb does 2 million bookings every night. The company has hosted 500 million guests since its founding. Airbnb does double the amount of bookings as Marriott, and which is the world's largest hotel chain. More than 4.7 billion in the capital has been raised. The market value is currently at 18 billion dollars, which we will also discuss further in this video, with a 50 billion dollar upcoming IPO. Now Airbnb is currently more valuable than large established travel brands like Hilton, American Airlines, United Airlines, and Expedia. And this is again one of the positive points, that Airbnb is a well-established brand. So Airbnb filed confidential IPO paperwork earlier this year in August, and since we are talking about that the IPO might happen this year in 2020, and we already know how this year has affected the whole world, especially the traveling industry. So let's first have a look at the Airbnb's current situation. So the first thing, guys, which I would like to point out here is that this is not the first time we are hearing Airbnb going public. They were actually ready to go public last year as well in 2019, but probably they did not do it because seeing some failed IPOs like Lyft and Uber, and especially the main reason which I can think of behind this is that it could be that IPOs are actually a way to raise money, and Airbnb actually never had that need to do it because of its sound business and earnings. I mean, just look at the numbers here. In 2016, the company reached a $1.5 billion in revenue, which shows a 67% year-over-year growth. In 2017, its revenue was $2.5 billion, which shows a 73% year-over-year growth. And in 2018, it hit $3.6 billion. And last year, Airbnb's value was said to be as high as $35 billion. So guys, these numbers shows that they probably never had that need. And okay, if they would have gone public in 2019, it would have been good for the company, because with such big valuation they could have raised a really good amount of money. But then it could have been not so good for us as retail investors to buy such expensive company. So this might not be a really good time for the company to go public in such unfavorable conditions, and we will discuss this further in details as well, that why they are doing it right now. But anyways, so it might be a really good time for us as retail investors to invest in such a company which has a really great potential, and maybe it could be presented to us with a huge discount. But anyways, we will check all the numbers and we will discuss this also in details further in this video. And why these are unfavorable conditions for Airbnb now? Well, it's quite obvious considering the current global situation, but the hit it has taken on Airbnb is quite intense, and this brings us to our list of few bearish points. And the first point is that by mid-March, at the onset of pandemic, Airbnb's bookings had been decimated, which resulted in its huge valuation of $31 billion to drop down to $18 billion, which is nearly half of its all-time high valuation of $31 billion. And the reason behind this was obviously the reduce in the number of bookings. Plus, on top of that, they also faced fury from the hosts because of traveling restrictions. They had to refund the money. So this actually disturbed the relationship between the company and the hosts. And to come out from this mess and to weather this storm, like we have seen in the entire traveling industry, Airbnb as well had to secure a debt of $2 billion with quite a high interest rate. And due to such cases, Airbnb took a massive hit as the company experienced a significant drop in its revenue by nearly 67%, which is huge. So Airbnb suffered a loss of $276.4 million in the quarter 4 2019, and this was even before the pandemic actually struck. So, considering this big downturn for Airbnb, some analysts are not so positive about the company's situation. But to be honest, guys, this is not just with Airbnb. The whole competition is going down. So, according to me, Airbnb is still in a better position because, especially when we talk about their cash position, Airbnb had more than $2 billion in the bank at the end of the year. So, like everyone else, of course, Airbnb would also have to undergo some severe financial engineering to get through 2020. Like we already saw, they took a debt of $2 billion, but of course, that $2 billion and plus some more cash position will definitely help them and navigate them through these unprecedented conditions. So, since we are talking about the bearish case scenario, Airbnb, to cut on some more cost, recently laid off 1,900 employees. But actually, according to me, guys, this is not just a bearish case. We are seeing this throughout the whole industry. This simply means that Airbnb is taking all the measures to just stay alive until the IPO and to somehow get through at least 2020. So, like we saw that Airbnb had to raise a debt of $2 billion in financing, and this is because Airbnb is preparing for the additional costs considering their increase in the cost in the previous quarters. For example, Airbnb is currently spending heavily on upgrading the technology of its platform, with costs running at more than $100 million a year. And apart from that, they also experienced growing SGA or general administrative expenses, which is more than doubled year over year to a total of $175 million in third quarter. And all these factors which have resulted a reduce in their revenue and are facing a significant downturn, this article right here proves that how desperately they are looking forward to raise more funds. As before the pandemic, Airbnb was expected to go public using an alternative process, which is called a direct listing. But through this process, companies cannot use it to raise funds for their treasuries. So if they needed to raise funds, they had to go public through initial public offering, which they are doing right now. So according to me, Airbnb is not doing this because they want to, it is because they have to raise funds in this year 2020. And I guess this answers our question of why they are doing this in such unfavorable conditions. But I would just like to point out one thing here, that they are actually not wasting money from the debt money which they have raised or from their liquid cash holdings. Now, I don't know how much exactly they have in their cash equivalents, as the company is not public and they don't have to share all the financial details with the retail investors. But anyways, what I would like to say here, that they are at least not flushing the money out like other unicorn companies who bled money before and after the IPO. I guess you all know the names. But anyways, so Airbnb on the other hand was a highly profitable business until 2019 with an evaluation of $31 billion. So like I just told you, that those companies which were much hyped unicorn companies, they shed billions of dollars in market capitalization since making their stock market debut earlier this year, which actually pointed towards a growing disconnection between the private valuations and public trading levels. And thus, they have suffered substantial amount of losses. And this is what I wanted to point out here, that Airbnb is a business with a good strategy. And this becomes our first bullish point. And since we are talking about bullish points for Airbnb, well, Airbnb somehow is always more valuable if compared to hotels. But this is just my point of view, guys, especially for a guy like me who seeks value in every investment. So until and unless I'm not on a business trip and I'm traveling for leisure, then I always prefer Airbnb. And these are some of the reasons why. Well, Airbnb gives you the opportunity to rent an entire home or even a room shared in a shared space. So, for example, if you're a solo traveler and you want to make friends or you're looking for some company, then this could be a good opportunity. But on the other hand, if you're not looking for any company or you just want a cheaper option, then this is your way as well. And the second point is that having your own space, possibly with full stock kitchen, you're also saving up money for, let's say, restaurant dinners and stuff like that. Okay, if you want, then that's a different story, but this gives you an option and you can still go in for the restaurant. So this gives you a lot of freedom instead, and to relax and enjoy each other's company, so you feel like home because you have a whole apartment by yourself. And with Airbnb, of course, you cannot always expect special amenities and services. But yes, if you want, then also there are some special places where the host have hired people to provide such services. So you just pay some extra money at the end of every day or in lump sum amount, and which will still be actually a lot less than a hotel in the vicinity. So depending upon different areas and locations, you can actually get all the options to choose from. And guys, I'm not denying the fact that yes, sometimes hotels are a better way, especially when you're with kids or children, as their services like changing bed sheets and towels can be really helpful in those cases. And usually you know what you're going to get as soon as you step into the hotel. And of course, it is more safe. Okay, you still have to find the hotel according to your needs and the location of sightseeing. But then also, on the other hand, you can always read Airbnb's reviews on locations, quality, and security to make a safe choice. And research anyway should be always a part of your journey, right? So make it a part of your journey and travel experiencing the life of a local in that city, because Airbnb gives you that opportunity. So anyways, guys, this is a never ending debate. Some people will always choose hotels over Airbnb, and some people like me will choose Airbnb over hotels. Of course, it is always dependent on different scenarios, but let's say for the majority of the cases. So let's move on. And after mentioning that debate of Airbnb over hotels, I just could not stop myself to mention this point as well. So, in case of Airbnb, you actually have the opportunity to get to know the owner or the host. So, you can contact the host, then the host sends you a special offer, you read the offer, then you can actually chat with the host to know him or her better. And then you can actually talk about negotiating. So, in short, you can actually negotiate the price. And this is because when we talk about Airbnb, we generally relate it to younger people, but that's not actually the case. This statistics right here shows that yes, the highest number of Airbnb users are from the age 25 to 34, but then if you notice the difference between 18 to 24 age group, which are the group of the youngest users, and then 35 to 44 and 45 to 54, the difference is not that big. In fact, the average number of users are more if you compare it with the 18 to 25 group users. So there is a vast deviation, guys, in the user age groups. So Airbnb also reported 1 million bookings in a single day in August after the pandemic struck. So this actually shows that they can really get back on their feet quite quickly as the situation starts improving. And when we talk about that they can get up on their feet fast, it is because it is a well-known brand name with good market dominance and reputation. In fact, guys, they are bigger than some of the huge players in the industry when we take revenue as a growth factor. So Airbnb is more than 3 times larger than TripAdvisor on a revenue basis, and about one third the girth of Booking Holdings, which according to me is a huge growth. Because unlike these unicorn IPOs where the IPO valuation was far away from their real valuation and thus finally dropped down by quite high percentages, as they burned a lot of money before and after the IPOs, which actually resulted in a negative growth in their finances and thus their market cap suffered. Airbnb won't be probably facing this situation because of their strong cash position until unless they do the same mistake. And apart from that, Airbnb's board includes big names like former American Express CEO Kenneth Chenault and former Pixar executive Ann Mather. And meanwhile, Chesky also has his fair share of prominent mentors like Warren Buffett. So I definitely don't think that they will repeat the same mistakes like those unicorn IPOs, and that's why I'm quite in favor of this company. Now let's get on to some numbers for a better understanding on how we can take an opportunity to invest in this company. So now let's talk about the numbers. So on the left column, as you can see, we have the numbers from Airbnb, and on the right side, we are taking booking.com for the comparison, because like we saw before that Airbnb is already 3 times bigger than TripAdvisor and one third the girth of booking.com. So for the sake of good comparison, we are taking booking.com as its direct competitor. And the market cap of booking.com at the time of making this video was at $69.5 billion. So comparatively, yes, booking.com has a huge market cap and is a bigger company. Then moving on to the revenue, and the revenue for 2019, like we also saw earlier in this video, for Airbnb was around $4.8 billion and for booking.com was around $15.07 billion. By the way, just for information guys, for the booking.com, I have taken all the numbers from Yahoo Finance. Now moving on to price to sales ratio. So we are taking price to sales ratio because Airbnb did not have any earnings in 2019, and that's why we are taking price to sales ratio. And similarly for booking.com, we are also taking price to sales ratio. Yes, booking.com did have earnings in 2019, but just for the sake of comparison, we are taking price to sales ratio. And as you can see, that price to sales ratio for Airbnb is less as compared to booking.com. So that means it is a good thing for Airbnb. So that's our first positive point. So our next parameter is annual growth rate, and annual growth rate is simply a growth in the revenue year over year. So for the calculation of the increase in the annual growth rate of Airbnb, I simply took the total revenue of 2019, and for that I added up the revenue of 4 quarters because there was not a whole number like for 2018 for 2019. So I added up these four numbers and I got a total revenue for 2019, and then I simply divided it by the revenue of 2018, and by doing that we get an annual growth rate of 34% from 2018 till 2019. So coming back to annual growth rate for booking.com, and it is just 3.8%. So if you guys don't believe me, just go to Yahoo Finance and check for booking.com or Booking Holdings. So the revenue for 2019 was 15.07 billions and for 2018 was 14.53 billions. Now just divide this number and you will get a growth rate of just 3.8%. So coming on to earnings, after this we do have to consider the earnings, because with this we will calculate our valuation and at what discount we can get into Airbnb. So of course these are speculative earnings because we don't have the earnings report for Airbnb, and for this I took an average PE ratio because I have to take a PE ratio to calculate the speculative earnings. So I took an average PE ratio of the e-commerce industry, which is approximately 30, and for calculating the earnings, I simply divided the market valuation by this average P ratio, and thus I get an earnings of $600 million. Again, guys, these are just speculative earnings. And for booking.com, of course, we do have the earnings report. So the earnings were $4.8 billion for 2019. And thus this gives us our net margin for Airbnb. So net margin is simply net income or earnings divided by the revenue. So 600 million divided by $4.8 billion, which gives us a net margin of just 12.5%. And the net margin for booking.com is 22%. And trust me guys, that net margin of 22% is nothing. In fact, booking.com has experienced a net margin of as high as 32% as well. So I'm just taking a really conservative approach. As you can see, in all these years, if you just scroll 2012, 2014, 2016, it has been above 22%. So just for your understanding guys, what net margin actually is, it means that Airbnb has to operate at a net margin of 12.5% in order to produce an earnings of $600 million, in order to justify a market valuation of $18 billion. As simple as that. So now if we go in reverse and let's say that Airbnb can reach a net margin of 22%, which is equivalent of booking.com, which I definitely think Airbnb can reach in future. And still guys, this is a really conservative number to be honest, because like we saw that booking.com has even reached a net margin above 35%, and with the growth rate comparison of Airbnb and booking.com of 34% and 3.8%, I definitely think Airbnb can achieve a net margin of at least 20%. So with 22% and with revenue of 2019 $4.8 billion, we get an earnings of $105 million. And we got this earnings of $105 million by simply multiplying the net margin 22% by the 2019 revenue of $4.8 billion. And this simply means that Airbnb can generate an earnings of $105 million if Airbnb can operate at a net margin of 22%, which I really think Airbnb can in the near future, because guys, still that's the lower end of the net margin from booking.com, who has a growth rate 10 times lower than Airbnb. So I simply think that Airbnb can definitely operate at a net margin of at least 20%. And with $105 million in earnings and the P ratio 30, that gives us a market cap of $32 billion, which is $1 billion still higher than all-time high of Airbnb market valuation. But again, guys, these are just some speculative numbers to calculate and understand that at what price and evaluation we could open up a position into this company to reap the benefits. And this simply means that if Airbnb will have an IPO evaluation of anything lower than $20 billion, I would definitely be interested in this company, as the history shows that the company has a decent growth rate, and as soon as the pandemic ends, the company would be able to generate some strong earnings to justify its market cap and reach new highs. So in the end, guys, I would just like to say that considering all the bullish and the bearish scenarios, my conclusion is that bullish points does outweighs the bearish points. And also considering its market dominance and reputation in this industry and the best value for money we usually pay, at least according to me, and after looking into its past performance and growth rate, I think that it has a huge potential to grow in the coming years. So if we can get into this company at a cheaper price, like we just saw, that anything below $20 billion, then I personally would be really interested in this company, as I think that this could be a really good long-term hold and growth stock. And hereby I rest my case. So that's it, guys. That's all for today, and I hope that you really liked this video. And if you did, like I have said, please don't hesitate to hit that like button, and that will really help me and the YouTube algorithm for me to promote this channel to the people out there who really would get help from this content. So that's it. That's all for today. Stay safe, stay healthy. See you in the next one. Till then, ciao.